You for joining us today. Welcome and thank you for joining us today on April 1st as we have another session on CPACE financing. And we want to welcome and thank one of our capital providers in the program, Nuveen Green Capital, for coming on today and sharing with us about their project with the Old Dominion Tower in Richmond. Next, please. I do just want to do a little housekeeping. If you want to put your questions in the chat, you can reach out to the entire team or individual folks. And at the end, we will take questions and answers. So what is CPACE? CPACE is actually the Commercial Property Assessed Clean Energy Private Loan Program that is administered through Virginia PACE Authority. It's a clean energy financing tool that provides 100% upfront capital to property owners who want to upgrade their buildings with energy efficiency, renewable energy, and water management systems. Virginia PACE Authority is a not-for-profit. It was created by Abby Johnson, who's the director of director of VPA in the 20-teens. And when the program decided to go statewide, VPA won the RFP to be the administrator of the program. And the program has gone from a local program with several PACE-enabled jurisdictions to a uniform statewide program, now with 24 jurisdictions. So what do? We are responsible. Can you go back to the slide, Abby, that's Virginia PACE Authority? Thank you so much. The next one. So what do? We actually do everything from working with the jurisdictions to onboard them into enabling PACE, as well as managing and approving all projects and working with our contractors and capital providers. And we do all the marketing to all of our stakeholders. So at this point, with all of our jurisdictions, we are representing more than 51% of the state population. So that comes from Northern Virginia with Loudoun, all the way through the Richmond corridor and down to Virginia Beach. And then we have small cities like Martinsville that have also passed the program. We work with localities to enable the ordinances. We review all the applications for the loans. We facilitate closing of the loans. We work with the contractors and our capital providers like Nuveen. We market, we do outreach, and we collaborate with our localities to promote PACE. Next slide, please. So since the program's inception as a statewide program over the last few years, we've closed $125 million in projects overall. But last year was a very big year with $109 million, and that included the Dominion Tower that Nuveen will talk about in a moment. We've closed loans in Prince William, Petersburg, Leesburg, Rockingham, and Richmond. These are projects anywhere from rehab to the senior center, which I'll talk about in a moment, and hotels, which Nuveen will talk about. And I do want to give a shout out to Nuveen because they were our first PACE lender to close a deal in the state. And this project was in Prince William County, and it was a senior center. It was an $8.7 million loan. And I do want to also say it's not quite the NCAA, but it was between two lenders closing, and I think Nuveen beat them by an hour and a half. So congratulations to Nuveen for being our first lender. Next slide, please. So what is PACE? It's a method of private financing. We don't give out the money. You work with our lenders, and they give the money just like any type of loan. It handles energy. It covers energy efficiency, resiliency, stormwater management. It's an economic development tool that you can offer to your property owners if they are looking for extra capital in part of their capital stack. It's a fixed rate terms, and it'll go up to 35 years. It's non-recourse to the property owner, and it will pay up to 100% of those project costs for energy efficiency. Next slide, please. So this program is sponsored by Virginia Energy. That's who we report to. It was established by a state code. You have to pass an ordinance within the jurisdictions in order to use PACE. We've updated the statute twice since taking over the program. The first time was to include all the resiliency and stormwater measures, EV infrastructure, other things. In 2025, we added ground lessees to be eligible. We increased the retroactive financing period from 2 to 3 years, and we allowed for common areas of condos. Next slide, please. So the ordinance has to be passed because this is a special assessment on private property. It's not a tax, it's a special assessment. And because the program, we took it statewide because the lenders really wanted to have a standardized program. So we have all of this package of documents, including the ordinance and locality agreement, which is for the jurisdictions, and all the loan documents are all standardized forms. Next slide, please. So CPACE lenders like this program because of the special assessment. The property owners like it because it technically is supposed to be paid like any other tax bill twice a year. And it gives them strong security with usually very good, attractive loan terms, which Naveen can talk about later. Next slide. Thank you. These are our enabled localities. As I said, there are 24, and we are actually bringing on 2 more soon, Danville and Madison. So you see there's just a wide range of cities and counties, different sizes that do PACE. So next slide, please. So what does PACE do in terms of a locality? It revitalizes buildings. And you can see from the picture, if you have an old building, and we had this project in Petersburg, it was an old hotel, and they revitalized it to a new one. Or you can do new construction, and this brings in commerce to the city. Next slide, please. And this just is another aspect of economic development. It improves your property values, and it contributes to the tax base. Next slide, please. Right, it also stimulates the local economy through new development and construction projects, and jobs. Next slide. And if you're also looking for a community, if you have sustainability goals in your community, PACE can add to this by fixing up the old buildings. And it also supports, as I said, your sustainability goals or any business sustainability goals when they use it. Okay, next slide. And one other point about sustainability and energy efficiency for building owners, as I mentioned, it helps them if they have to do certifications or other green building measures. Next slide. So what does it mean for staff? We tried to make this program minimal work for staff. So in the beginning is probably the most work that jurisdictions will do. It includes working with us, and I will go through sort of a diagram later, but you have to pass the ordinance. So you have to present it at council. We help with all this early education and handling all the documentation. Next slide. Staff are not responsible for collecting or dispersing the PACE loan payments. Next slide. You can also delegate the lien enforcement to the CPACE lenders so that the treasurer or the Department of Finance doesn't have to do this work. And the payments are not collected by the locality. It's a direct bill state, and the capital providers handle it. And the next one. You also, as a locality, you assume no risk for the CPACE projects. You are held harmless. It's part of the program, is part of the locality agreement, and in the program agreement that's part of the loan documentation. Next slide. There's no credit exposure or bonding issues for a locality. Next slide. You are not guaranteeing CPACE projects or any of the financing in this. There's absolutely no part of this that the jurisdiction has to be involved in terms of repayment or anything with the loan. Next slide. So this is just a diagram that shows the process of us working with the jurisdiction to actually pass the suite of ordinance documentation. Next slide. So the first one is VPA will meet with staff, and we will provide an education on all the documentation, not only the ordinance, but all the program documents. We have program guidelines that our capital providers have to follow in order to present an application to us. Next slide, please. And once we meet with you and we send you those documents, the jurisdiction will review all those documents. We don't look for there to be any changes. These are really form documents, and you will see them over and over again with projects that come in. Hopefully, jurisdictions will have a lot of projects, and it would just be the numbers that would change. So we will work with you to go through the documentation and just see if there are any issues, and then you would designate a program manager. Next slide. Then, after we've worked with the staff, there's the process of going to board and council, and that's, as you know, for jurisdictions, You have to present it, you have to put it up for a public hearing. So we usually say that at a minimum 3 months when a capital provider looks for a jurisdiction to come on board, 3 to 4 months. Sometimes obviously it takes longer, it just depends. Usually staff will present to council, but VPA staff is willing to do it. We usually come in virtually, depending on where you are in the state. And then the next slide. And then you will have the public hearing, which I mentioned, where you will finalize the documents and then we'll put it up for vote. And hopefully it passes. We haven't had trouble with that. And then the last slide is that it is adopted. And we move on from there and you sign the locality agreement with Virginia Energy that just says that you will do and abide by the program guidelines. And then last slide. So this is a lot of information. I went through it very quickly. We are more than glad to schedule calls to follow up and answer any questions. And this is our contact information. And I also wanted to, I think I did not introduce Abby and Holly, who are on here, are part of our team, if they want to say something before I introduce Nuveen.
Sure. Thanks, Ellen, for that outstanding presentation. I just want to thank, like you already did, the Nuveen team for not only presenting today, but really being great partners in our state. We've always had a really stellar interaction with them in terms of just, understanding when projects are coming along, sharing information about our program, and also in the closing process. I also want to shout out to our subcontractor Slipstream, who is putting on this webinar and with whom we work closely, including Holly here on the team here. So Holly, I don't know if you want to say a word or two. She's shy today. Anyway, she's great. We
Well,
we
Holly
work very
actually,
closely with her. So
yes, Holly
anyway,
actually is the first point of contact after you've spoken to us because she manages the application portal. So you will put in your applications, and that's when you will talk to Holly, and she'll go over all the initial parts of your application and help you get on to the next steps. So she's a very integral part of the team. All right, so let me introduce Nuveen Green Capital, who is one of our capital providers, and they have been a big part of some of those project closings that I mentioned earlier when we were looking at those numbers. So I will pass it over to Nuveen.
Yeah, thanks, Ellen. Cam, I don't know if we'll pull up the slides here. Appreciate the Virginia PACE team having us on. As they mentioned, we've been working together really since the inception of this program. So they're a real powerful partner for us throughout the state. So appreciate the time. I'm Ryan Doyle. I oversee the Mid-Atlantic and Southeast for Nuveen as it relates to CPACE originations. I've also got Brendan Moore, who's a director on our team. He resides in our New York and Connecticut offices. And then I've got Cam Shavira, who's a senior manager on our team, who is a native of Virginia and based in our DC office. And I'm actually, I should mention, I'm in our Atlanta office, but am a Virginia native, was born and raised there. So in terms of what we want to cover, it's kind of threefold. So one is just an intro on who we are. And I think we alluded to it. Ellen pointed out, we've been involved with the Virginia program since the inception, closed the first CPACE loan there in Virginia. Obviously, the 707 East Main deal is one that we've closed here at the end of 2025, which we're excited about. And Brendan's going to give us some overview on how that project came to be. I also think it just provides a good example in terms of how PACE can be used in real time. And then finally, we can answer any questions, discuss specific project-related questions that the audience may have. But, in terms of kind of who we are, so Nuveen Green Capital, we're part of the Nuveen Investment Management Platform, which is a leading investment management firm, $1.4 trillion in public and private assets, and are the investment management arm for TIAA, or Teachers Insurance and Annuity Association. So that's kind of what our corporate infrastructure looks like. In terms of Nuveen Green Capital, and Nuveen specifically, we've been investing in real estate for over 90 years. And similar to our long-term track record in the equity and traditional debt spaces, we're also one of the pioneers in the CPACE industry. So as of the end of 2025, we had invested approximately $5 billion nationally in CPACE loans. We are the largest CPACE platform in the country. I think we've got, at this point, I want to say over 50% market share, and are active in all 40 states in the U.S. where there are active CPACE programs. So we do have a national reach, but I think it's important to point out that we have a local presence, such as the presentation here today, as we partner with different PACE programs throughout the country, and actually have offices in about 10 different markets across the U.S. In terms of kind of the second point, which is what is CPACE and how is it used, which you can see the CPACE 101 slide here. So the first thing I would say is it's very flexible. It can be really used across all product types. It can be used pre, mid, and post-construction. And Cam, if you flip down a couple of slides, I think you'll get an example of that pre, mid, and post-construction, which just, I think, further emphasizes all the different ways that we can come into a project. We can generally finance up to 25 to 45% of a property's stabilized value. Fortunately, in Virginia, we're actually on the upper end of that, closer to 45%. We can also we can finance ourselves as really the only capital provider in the cap stack. But I would say, the overwhelming majority of the time, we're partnering with banks, life insurance companies, debt funds, really to serve as kind of that vital gap capital piece where we come in between the senior debt and the equity. In terms of kind of the other part of PACE, so we're flexible. We're also efficiently priced. We price over the 10-year U.S. Treasury. I'd say coupon ranges for us are kind of in the 6.5% to 7.5% range, which is, I would say in line with senior bank pricing at this point. Certainly inside of other forms of gap capital, such as pref or mezz, which is usually has coupons, and I would say probably the 10% to 18% range, depending on the asset and the leverage point. So I think, in terms of flexible, efficiently priced, and then finally, I would say that we're non-recourse, which I think is an important variable. On construction transactions or capital projects, we will have a completion and repayment guarantees, both of which burn off at CO for the life of the loan. So no pledge, no recourse required. I think that certainly resonates well. And look, we're non-recourse lenders. We underwrite the real estate. We try to understand the market, the property types, the dynamics around the capital stack. And so, without further ado, I think the best way to really talk about PACE is to look at a live example. So I'm going to hand this over to Brendan, who can provide an overview on the 707 East Main project. This is one we're excited about, closed at the end of December in 2025, and CPACE was utilized for this project. So, Brendan, I'll hand it over to you at this point.
Great. Thank you, Ryan. So like Ryan said, we have a representative transaction up here called 707 East Main Street. This was a $38 million CPACE financing that we closed in December of 2025 for the conversion of a historic office building to multifamily apartments and hotel in downtown Richmond, just a few blocks from the Capitol building. Nuveen here closed alongside a bank construction loan, as well as historic tax credits to complete the overall capitalization. And as I mentioned, the asset is a 20-story vacant office building that was the former headquarters of Dominion Energy. The sponsor here is Douglas Development, who acquired the building in 2024 and immediately began interior demolition. The financing was then closed last December, and the conversion is now underway to convert the bottom half of the tower to a 210-key AC hotel, which is a Marriott brand, and the top half of the tower into 288 residential units. Douglas is an extremely experienced developer, particularly in the conversion of historic office buildings, having done the deco at CNB in 2017, which is just a half a mile away from the 707 East Main Street building. So the CPACE conversion was used the CPACE financing was used to fund the conversion, particularly costs associated with the eligible measures such as the building envelope, HVAC, MEP, and low flow plumbing fixtures. And as mentioned, the construction is underway, and we expect the project to be complete and operable in 2027. So with that, we'll go to the next slide and just kind of some key takeaways and facts about the deal, and I'll kick it over to Cameron.
Sorry. Yeah, I think it's been mentioned before, but I think one big key takeaway was just the importance of the deal for the market for the Virginia PACE program and as well as Richmond. So first deal, CPACE deal closed in Richmond, and I think we see a lot of potential in that market and in Virginia generally. I think, as Brendan mentioned, Douglas specializes in conversions, and that's, part of the reason why we want to tell the story of this project is because, other developers, and certainly in and around Richmond and in other markets that specialize in those types of projects, if they're not familiar with CPACE financing, it can be a great tool. It fits very well with incentive financing. I think Brendan mentioned the historic tax credits that were utilized here. And then just in terms of impact to Richmond itself, it brought, much needed residential units to the urban core and kind of transformed the underutilized office building to a much needed asset, both with the apartment units as well as the hotel rooms, which will kind of allow Richmond to, attract more events, have more places for visitors, and kind of further grow the vibrancy of the downtown and the urban core of the market. So, transformational project for the market, transformational project for, I think, the Virginia Sea Pace program, and for us as Nuveen, getting to partner with all of these entities as well as Douglas. I think for Douglas as well as ourselves, there's a lot more potential for projects in Richmond as well as in Virginia. And with me and Ryan having ties to DC, myself being here, we've seen firsthand kind of the impact that Douglas has made in the DC market with these types of projects, Chinatown and whatnot, and we foresee that for Richmond and other Virginia markets as well. Um, I think also on the impact side, there's the energy savings impact, which are material. So again, for these types of projects, CPACE works really well because there's dated MEP systems and other parts of the building that can very easily qualify for our financing. So those also, bear results in terms of the actual energy savings and building efficiency, which obviously goes to developers' bottom line. With this project, we were able to save overall 3.3 million in energy savings. And what that looks like compared to, baseline energy code is, 16% above the energy code for the residential and parking component, and 23% above the baseline code for the hotel component of the project. So really substantial impact in terms of the actual energy savings and what the building is doing in terms of the environment and the impact there, as well as in operational savings for the developer and their bottom line. So again, I think CPA is a very valuable tool for all parties involved in these types of developments, and there's uh, audit and reports and many things that go behind this to kind of prove that out. And as you can see, there's some pretty material cost savings as well as energy savings, and a major, I think positive and very well received project in the market. The mayor and others from the city spoke very highly of the project at the groundbreaking and very much in support of it. So we look forward to more CPACE in Richmond and in Virginia.
Thanks, Cam. Ellen and Abby, I don't know if you guys Q&A at this point, just in terms of specific questions about our platform, our program, obviously 707 East Main, maybe how it could apply to other projects, kind of what we've got at this point.
Yeah, I mean, either Ella and I can take the Q&A. We will check the chat. I do want to ask a question. First of all, I want to thank you for doing this project. I was on the board of Virginia Housing, which is the housing authority, for 7 years, and they're always putting us up in these hotels that are really not great. So I'm very excited that you're going to developing a hotel, helping develop a hotel in downtown Richmond. Although I'm not on the board anymore, but it's sorely needed. I can attest from that from personal experience. I also want to say that I really think that it's great your interest and participation in the state, and really look to see that you do a wide variety of project types around the country and also in Virginia. You've got other, 3 different property types that you've financed here. Another one we'll talk about, another venture, unless you want to bring it up now. I mean, we can talk about it in another webinar. One thing I wanted to ask you all before we look at the chat is, is there like a sweet spot, like an ideal kind of project type or size or capital stack mixture? I mean, I know that you can do a lot of variety, but if you had to say this is the kind of project that we just know, cookie cutter, we can do all day long, is there one, kind of an example you could share?
What I would say to that, our number one and number two property types that we typically finance are hospitality and multifamily. So easy to say, that's why 707 East Main checked a lot of boxes from our perspective. Also, average loan size. So in 2025, we closed $2.1 billion in new C-PACE loans nationally. Average loan size was about $30 million, which also resonates well here. So, I would say product type, multi-hospitality, although we're active across the spectrum in terms of product types. Loan size, we can do anything down from $5 million. We just closed a transaction, actually on another conversion in the district, which was $465 million on C-PACE. So that's a new U.S. record, but that's certainly, I would say, not the norm in terms of where we kind of focus. But predominantly in the Mid-Atlantic and Southeast, we're kind of, let's call it 10 to 50 million is our sweet spot in terms of where we look. And then, we can really lend in primary markets, secondary markets, tertiary markets. We do have some flexibility. We look to the real estate if we like the sponsorship, business plan. That's certainly something that we can get active in a wide range of different market sizes. So it's back, Abby, it's a good question. It's kind of back to, we're pretty flexible, but those are kind of like the guidelines in terms of why we liked this project. And then here's generally what we're working on, kind of year over year.
Well, first of all, everyone talking about that DC project. So we may ask you later just to give a little, to talk about one thing we're trying to consider in our program, which is embodied carbon. I mean, I know it's something you're doing. We're looking to see if it's something that legally we can include, because we think that's a great measure. So I don't know if you want to say anything about that. And then I have one more follow-up question after that.
Yeah. So this is a project called the Geneva. It's with Post Brothers out of Philadelphia. This is one that we came in and financed the conversion of a former office building, similar to the Minion deal, right, into solely multifamily. So no hospitality aspect here. And what Abby is alluding to is the way that we were able to be effective and really provide, I think, a lot of value to the sponsor on that project was enabling us to adopt a principle within green energy called embodied carbon. I think the way I think about it, and maybe more technical minds on here might think about it a different way, but the carbon savings that we get from repurposing and keeping an existing building and simply adapting that to a new use as opposed to tearing it down and rebuilding, that opens up the ability to qualify additional measures that we typically would not have on ground up construction. And so the Geneva project was an interesting example of a deal that we had looked at for the last couple of years, had really, kind of explored this embodied carbon, kind of principle, which, by the way, is something that's adopted in other PACE programs in the country. But once we kind of, and my counterpart in the Northeast really kind of led the charge on that, Mike Doty. And it was one where once we kind of started looking at this concept, understood what that opened up, it increased our available loan proceeds, I want to say, by close to 100%. So with that, it enabled us to fill a vital part of the capital stack. We did have a senior lender partner, which was a debt fund that partnered with us on this. But yeah, that really was kind of an important project that we've talked to Abby about in terms of maybe there's ways that we can incorporate a similar concept in the Virginia program.
Yeah, thanks for that. One other thing I wanted to, it's something that's come up to me a lot as a general question is, well, two things. One, I like the fact you brought up you'll do different kinds of markets, because I think we know in commercial real estate there has been, at least historically, a focus on, class A and tier one type, locations. So, somewhere like where you're from, Roanoke, wouldn't necessarily be on the map for like, some types of senior lenders. So the fact that you all can participate in those projects, I think is really huge. And I also want to just, if you could speak a second or two about how you work with the senior lenders. Something in CPACE that is unique in the way it's structured, also in our law, is that you need to have the consent of existing lenders who are on the property. So if it's an existing building, if there's a loan on the property, that bank or lender would need to consent to the CPACE special assessment, or if it's new construction, would be a construction lender that you alluded to in your project in Richmond. So I just want to, if you wanted to speak, any of the three of you, about how you get them comfortable with having that payment be senior to their loan, which sometimes we don't like to talk about, but it's critical in getting deals done.
Yeah. Yeah, I think to your point, in terms of secondary, tertiary markets, I mean, we're actively looking at deals in Charlottesville. We're looking at deals in Danville. We're looking at deals, like you mentioned, Abby and Roanoke, actually where Cam and I are both from. So, yeah, I think it affords us flexibility, and really the focus here is to look for good real estate, good, borrower partners. In terms of the aspect of senior mortgage lenders, it's one that we spend a lot of time on. Like Ellen, I thought, did a good job. It's not a tax, it's a special assessment. And so with that assessment piece, I think it takes some education, and we spend a lot of time in our team talking to different senior lender partners. At this point, we've closed with over 250 different banks, insurance companies, debt funds. Generally, I would say in 25, we added 35 unique new groups to that list. So it's one that's always evolving. It varies by market, it varies by sponsor, it varies by property type, leverage point. So, I think even if you have a deep bench in a particular market, it ultimately comes down to kind of what makes the most sense for that asset, which is why we really try to cultivate those relationships. But as it relates to senior lenders specifically, we've put together kind of a piece that outlines what protections they have. And I think there's a couple of things that come with the fact that you've got an assessment structure means that you're non-accellerable. It also means that you're non-callable. And so that non-accelerating piece, I think a lot of questions we get have to do with seniority. Does the CPACE prime the senior loan? And actually with that non-accelerating feature, it's just the debt service payment due in the calendar year that's actually primed to the senior mortgage, not the principal balance of the CPACE loan. And I say that probably 20 times a week. I know Brendan does and Cam does as well. That's a critical, kind of piece of this. And I'm happy to have one-off conversations further about that. But that's something that I think is important in terms of how seniority sits, because, with it being an assessment, we do require consent from the senior lender. The senior lender is going to require consent as well. And so I think that, education piece, the non-accellerable, the non-callable, we can put an intercreditor in place if needed. There's also a depository piece where we can actually fund our proceeds at closing into deposit with banks. And really, to get additional support as it relates to credit risk, but two, to really help on the depository side. So that's something that's been a really effective tool. And like I said, you can do an intercreditor as well if needed. We don't require it, but I'd say we probably do that half the time, just to kind of understand how the different parties work, and particularly how the different parties work if things don't go as planned. But yeah, that's, obviously, like I mentioned, you're 25 to 45% of the debt stack. That's generally not enough leverage for most projects to pencil. And so I'd say more than 90% of the time we're working in conjunction with another senior capital provider. So we have a lot of those discussions, and I think there's always different hot buttons for different providers. So I think we're pretty flexible and fluid at what is the hot button and how do we get you comfortable.
Yeah, I want to ask something. I want to just go back to what you had mentioned earlier, Ryan, in comparison to other deals that we have had. And when we first kicked off this program, I mean, the deals were in the smaller range, and we have seen the CPACE loan amount go up, especially with your project, the $38 million. We had some that were in the like $3 million range. We have with some of our other lenders. So it's growing, but we do, if you look at our webpage, the capital provider list, we have about 23 registered capital providers. We also have registered contractors. I didn't do my presentation on really the projects because we wanted Nuveen to talk about theirs. But while PACE is actually a simple program, there are a lot of parts and pieces to it. So that's why it's good to talk to the lenders and also to talk to us so we can walk you through it. But from the project side, we have lenders who will go down to 1 million. I mean, that's usually where we see them start. We don't have too many that do below 1 million, and not many at all that will do 100,000. I mean, we can try to help point folks to that, but I would say the sweet spot from our perspective is usually about $1 million and up. But I guess sort of a general question for you is like, why would a property owner, and I mean, this is a very simplistic question, but a big one in a way, why would a property owner come to you? Like, what are the advantages? Like, even if they come to us and they find it, like what inspires them to come to use a PACE as part of their project?
Brendan, do you want to chime in on that? Just to, I mean, it can be a host of different reasons, you know, in terms of the different projects we're looking at. I'd be interested. Yeah, Brendan, I don't know if you want to give your thoughts on that. I think it's always interesting, the different motivations for deals and why they end up considering PACE.
Yeah, sure. No, I think a lot of property owners view us as an accretive part to their capital stack in lieu of alternative sources of financing when they're trying to, maximize leverage. Like Ryan said, and most deals were anywhere from 20 all the way up to 45% of the capital stack. And I think they find that our pricing can be pretty accretive overall. So for those property owners that might be getting, for instance, debt fund financing that typically comes with a higher coupon than a bank, CPACE might be a good fit to partner with that debt fund to bring the overall weighted cost of capital down and be more accretive for the property owner. And then I would say number two, and I think Ryan touched on it earlier, is we are truly a non-recourse lender at completion. So meaning we have a standard completion guarantee. We have a standard payment guarantee that lasts up until completion and then terminates once the project receives their certificate of occupancy. So I think for recourse sensitive property owners, they like that once the building's complete, it is truly a non-recourse product. And I think they also like that feature as well.
Okay, great. And I want to sort of move into another area, and then we can look to see if there's any questions. If anyone has any questions, please feel free to put them in the chat. So if we're talking with our jurisdictions today, which is a big piece of having PACE be available to property owners, for them, it's an economic development tool, and we've tried to make it so that there's no responsibility on them to service, or to handle anything enforcement. I mean, when they sign the locality agreement, they can certainly pass that off to you as well. When working with jurisdictions, I mean, I don't get very many inquiries from economic development folks about projects that are going on in their locality. How do you find projects? How do you find people? How do you need or want to work with jurisdictions beyond that they need to be PACE enabled?
Yeah, it seems like the way that we come into different projects can vary. I think one thing that's important to point out is, you know, PACE is a state-by-state program, not a national program, as we all know. So I say that because different states have different maturity levels in terms of where their programs lie. And so states that have more recently adopted a CPACE program, I think, you know, we have a lot more interaction with municipalities in terms of considering opting in, which to you, as you mentioned earlier, Ellen, I think it's been a very smooth process working with your team in Virginia. I think there is the overwhelming majority of counties that we actively see projects are currently opted into the program, and those that are not, we can always work with your team in terms of getting that opt-in. And as you mentioned, we've got a good success rate of getting that in. Usually it's a 45 to 60-day process, kind of depending on the municipality. But in terms of, how do we come across transactions? I mean, it can vary. I mean, a lot of times we come in through the developer, the sponsor themselves that read about here, a project, or here, have a webinar like this, have an interest in how do we best utilize this, and we'll get outreach. Our Nuveen team also does a really good job. We've got a team called MDS, or Market Development and Strategy, that literally what they do is do market outreach to different participants, developers. They look at, different kind of construction records in terms of identifying who might have an active project, who's filing permits. We really try to get a real kind of, deep level of penetration in terms of groups that might have an active use or might be able to really benefit from PACE, but just may not be aware of it. So we've got the brokerage community, the mortgage banking community, we've got relationships with that will bring us in for transactions to take a look. And then, such as yourselves. I mean, I know you guys, we've worked on different transactions and made introductions through groups that have reached out to you. So it comes in a variety of ways. I usually say we like to get involved earlier rather than later. And a lot of times we get involved even before the equity is all raised and before the senior lender is identified that there is one. So the earlier the better. And then that, we can kind of give you an idea of how could we fit within the capital stack? How much equity will you need to raise if you had the PACE that you can put in, work in conjunction with the senior lender? So seems like it comes through a number of different channels.
Okay, for our participants, I'm going to give you, we're coming up slightly up on our time here. If there's any questions in the chat, please put them in. If not, I'm going to ask a parting question to both Abby, our statewide administrator, and to Nuveen. What are your market prediction thoughts for the rest of the year? So Abby, do you want to start with that one? And then we'll end with Nuveen answering that question.
Oh, great. Thanks for passing to me first, right? Well, one thing that's interesting about from our perspective is that we see what's going on in Virginia. We know, there's been challenges with the fact there's been lots of layoffs in Northern Virginia due to and so sometimes that kind of creates disruption, but we're seeing or COVID, which create a lot of kind of empty office buildings, but they're being repurposed, such as the one in Richmond and the one in DC. And so we are seeing, I think we're going to see more activity in Northern Virginia because there is this ripe for more housing. We are a dire shortage of housing, both affordable and market rate in Virginia. So I see that being a growing area. And I do feel that although, Virginia has some challenges, I think there's a lot of momentum. Our new governor has hired a chief energy officer, and I think we're looking to reach out to them because we think there's going to be a lot more focus on economic development combined with housing and combined with sustainability. So I do feel bullish about Virginia in 2026 and beyond, and think that we've entered an era where it's not an esoteric financial vehicle. I mean, I've been around PACE since the end of 2012, and it was really like, what the heck is that? And now finally we're over the hump where people are like, oh yeah, I've heard of that. Or yeah, tell me more about it from the developer and banking side. But I think that's a very good sign that it's made the mainstream, and projects like 707 have really made a huge impact. That one project has just got a lot of buzz, continues to have buzz, make some of our other jurisdictions go, wait a minute, what's that? We need that. So I think we appreciate the work that was done on that project and working with Nuveen. So I'll punt it over to Nuveen, one of you guys, to answer.
Yeah. It's an interesting question. I mean, what I would say is coming off 2025, we did 2.1 billion nationally, but 1.3 billion of that, or over 60%, was done in the Mid-Atlantic and the Southeast. So, we feel like from a geographic perspective, this is the part of the country. And by the way, when we get an allocation every year, we're targeting 2 billion again in 26. We don't have a mandate in terms of where the dollars go out. It's really where do we see the opportunities that we like. So We continue to see that here in the Mid-Atlantic. We've got 2 loans closing here in the next 30 days, one of which Brendan's overseeing and really running the process on, and one that Cam is. One's a ground-up hotel north in Maryland, north of DC, and another one is actually within the district, which is a refinance off of a construction loan on a medical office building. So that's about $100 million that we're going to, invest in the Mid-Atlantic here in the first, kind of 4 months of the year. I think bigger picture, obviously there's some macro headwinds with the war. It seemed like there was positive updates as it relates to certainty in the last 24 hours. The debt markets, I think, are very liquid. Banks in particular have come back into the debt space very strong. We've noticed a big pickup just in terms of participants and aggressiveness in terms of leverage pricing. Equity continues to lag. I would not say it's kept pace with the debt market. So there's a little bit of a kind of a dichotomy here where we've got a very liquid debt market and an equity market that's still trying to kind of figure out when they want to get back in the market. I think it creates opportunities for us. I think rates are going to be higher for longer, and I'm tired of saying that. We've been saying it for years, but I do. That being said, we're finding opportunities. We were talking about it yesterday on a call internally, and we're on par to get to $1 billion in new fee-based originations at Nuveen within the first half of the year, based on where our current pipeline is. It's a lot of existing and new sponsors, and then it's really kind of trying to find those opportunities, like we mentioned, where maybe we can push up and leverage, be the only capital provider, or go to our existing bench, or try to find new capital partners. So despite some of the headwinds, I actually feel like we're shaping in a good direction here for the year, at least for the first quarter.
Okay, great. Thank you. I am not seeing anything in the chat, so I think we are at time. So I want to thank our audience for joining us today. I certainly want to thank Nuveen for taking their time and talking through PACE and how a project works and what's going on with CPACE for them. And I also want to thank Abby, our statewide administrator, and I want to thank Slipstream for running this. And if anyone has any questions, please do not hesitate to reach out to us. We are more than glad to talk to you about PACE. So enjoy the rest of your day, and we're ready to go.
Thanks a lot.